Hey, what's going on everyone? It's Griffin here and I hope you're all having a great day as always. Now, I've been posting a few more real estate videos here and there on the channel, and I know the audience isn't necessarily as interested in real estate content as, say, stock market related content because it isn't necessarily as relatable and the barrier to entry is quite a bit higher in terms of time as well as capital. So no, you can't just go, say, on your Wealthsimple trade app and buy a duplex. I wish it was like that, but no, it is quite a bit more time consuming. However, I do feel extremely confident that real estate should 100% be a part of most investors' portfolio at some point down the line, whether or not that is right now and it's already a part of your portfolio, or if you are planning on starting to include real estate in your portfolio a couple years down the line. It's very important to start getting up to speed with the terminology and how it all works. As most of you are probably already aware, my portfolio holds a variety of different asset classes to not be too concentrated in one single asset class. For example, I hold stocks, ETFs, cryptocurrency, real estate, cash, and all of those together make up my global portfolio. In my opinion, real estate is one of the best asset classes that you can own, and I say this from my own experience. Like, honestly, if you've been following my channel for around 2 years now, then you have seen me and followed my journey from owning literally no real estate whatsoever to having then purchased my first duplex with only 10 grand and then scaling that portfolio up over the past 2 years to now owning roughly 10 doors and having created hundreds of thousands of dollars of equity in those properties spread out across the properties, having done strategic renovations and raising the market value of these properties. And FYI, I am no different than anyone watching this right now. The only thing I would say that I maybe did right in this situation is having maintained a steady job for that steady and reoccurring paycheck, because when you're starting out, banks really do want to see that steady and consistent income coming in. That is definitely one of the main criteria necessary for being approved for mortgage loans, debt of all kinds really, but mortgages especially. So anyways, even though most of my real estate related videos don't get nearly as many views as other topics, well, I have noticed that there is a pretty high amount of actual engagement in relation to views when I do make videos like these. And so I wanted to make a couple more videos sharing my experience as a landlord and pretty much as a property owner. The first one today being how a cash out refinance works. And this is one of the main elements in a BRRRR real estate investing strategy, being buy, renovate, rent, refinance, repeat. This is a strategy that I personally have been using since the beginning. It's helped me out a lot and is what has allowed me to create quite a bit of equity in each one of these properties, then tap into that equity, roll it into another deal, and start creating some momentum in the property business. This is exactly what I want to share with all of you and how you can replicate this for yourselves. So we're going to be jumping into an Excel spreadsheet and comparing two different scenarios of a cash out refinance, one with rounded numbers just to get the gist of how it works and get a good idea of it. And then we're going to be looking at a concrete example in my own portfolio, a deal I recently did with a cash out refinance. Before we do that though, I do want to thank today's video sponsor, which is Skillshare. Skillshare is an online learning community for creative individuals who are looking to broaden their skill set through thousands of classes available on the platform, ranging from topics including illustration, photography, investing, design, marketing, web development, and dozens more. One thing that's great about Skillshare is that it's a curated platform, meaning there are no ads whatsoever on any of the content that you're going to be watching on Skillshare. And the content on Skillshare is really broad. So for example, if you're still just getting into real estate investing and you want a full-blown 25-section class on the topic, well, I found this class right here on the platform called Sophisticated Real Estate Investing, the Core Strategies, Tools, and Mindset. Honestly, I watched the whole thing, and if you want to get up to speed with the main fundamentals, including spreadsheets and how to leverage your deals, then this is a great class on the topic. So if you're interested in developing new skills, then make sure to check out the first link down in the description to join Skillshare. The first 1,000 subscribers who do so will get a free trial to Skillshare's premium membership. All right, so let's get right into the breakdown of how a cash flow refinance works in this Excel spreadsheet. And we're going to be looking at a couple examples, the first one being with 5% down, and then the second one being with 20% down, followed with a concrete example of a property that I have purchased, done strategic renovations on, and now have refinanced it. Typically, property investors are going to use a cash out refinance for one of two reasons. The first one being either to increase the value and then tap back into that equity to roll it into another property, or also a lot of homeowners have, let's say in the past year, used the refinancing method to get a higher property value on their current property at a much lower interest rate. Okay, so starting with the first example being with 5% down. The reason why I'm even doing this is because it is going to be basically the exact same strategy. However, some numbers will be a bit different because when you put only 5% down, you do have to incur certain expenses like mortgage interest. So let's just start with it. I'm going to try to make it as easy as possible to follow. So let's say you purchased the property for $250,000 and you're putting $20,000 of renovations into this property. Well, at 5% down, the down payment would be $12,500, right? 5% of $250,000. And you're looking to refinance the property after all the repairs being done at $350,000. So let's just break this down, okay? First of all, your cash used is going to be $32,500. And this is the $20,000 worth of renovations, including now the $12,500 for the down payment. All things considered, this is going to be your base cost on this project. There will be some additional closing costs, including, for example, land transfer tax, notary, etc. But just for rounding of numbers here, we're going to do these numbers right here. So the initial amount, $12,500. And you're going to have to get a loan of $247,000 on this property at 5% down, the property being $250,000. You might be wondering why $247,000? Well, it's quite simple. When you put less than 20% down on a property, you need to get what's also called mortgage insurance. I've spoken about this in detail in a bunch of other videos. I'd highly recommend you check that out if you're interested in seeing my opinion on mortgage interest. If you're getting into real estate for the first time, I personally think it's worth it, but yeah, we're not going to speak about that in today's video. The way it works though is, so in this case, you're going to put $250,000, or you're buying it for $250,000, putting $12,500 down, but then mortgage interest on only 5% down, at least in Canada, is 4% of the mortgage value. So 4% obviously of this exact value, all combined together, is $247,000. All right, now from here, you're gonna go ahead and do those renovations for, let's say, around $20,000. And the reason why I only put $20,000, it could be significantly more. It really depends on the property. Every single property is essentially its own little business, and it's extremely difficult for me to give blanket statements on this type of information because every property is going to be different. Some of my properties I put as little as $5,000 in renovations in, just some new paint, a couple aesthetic things here and there, and others I'm going ahead and putting almost $100K into the property by adding a full new unit. So every single one's going to be different, but for your first project, I would highly recommend as little as possible and the largest bang for your buck, most likely being all aesthetic things, paint, new trim, potentially new flooring, things like that, and then also increasing the rents on the property. Because it's a rental property, the rents have a high impact on the aftermarket value, the after repair value, and the new market value of the property. Okay, so in this case, $20,000 in renovations, and the initial down payment was $12,500. So all in all, you only put $32,500 into the property. Now, when you go to refinance it for $350,000 though, when you refinance a property, you have to leave 20% in equity in the property. So in this case, your new loan is going to be $280,000. Reason being, 80% of $350,000 is, well, right here, $280,000. So from here though, the way it works when you refinance a property is you're getting a new appraisal for the property, and then from there, you're paying off your old loan. So because you're paying off your old loan of $247,000, the equity that is left in the property is going to be $83,000. And the way we got to this is $350,000. And then you're subtracting from that the amount that you put into the property, being $20K for you, and then the loan, $247,000. So the rest of that spread that you made right there is $83,000 in equity on that property. But the new cash is not going to be $83,000. The cash out portion that you're going to use is only going to be 13 grand. And the reason why it's 13 grand is because of that 80-20, right? Because you're leaving 20% of equity in the new property being $70,000. $70,000 is 20% of $350,000. So that equity is still yours and it's now dormant in the property, but it's only the excess that you're able to take out as cash and use for whatever you please. In this case, it would be $13,000. All right, so at this point, now that we've looked at the example with 5% down, I really hope that you're starting to better understand how the cash out refinance works. If any of this didn't make any sense or you need more clarification, just let me know down in the comments and I'll try to get to all those comments. However, you did probably notice here that you're only getting around $13,000 in cash in this particular example out of that property to then use and roll into your next property. So it really makes a lot more sense when you do have, or when you're putting 20% down on the property. However, I still really think that if you're doing your first property deal, whether or not it's with a duplex or a triplex, you should take advantage of the 5% down because your opportunity cost is there and you're able to invest a lot less money in your first deal and make a much higher return on investment. But with that said, let's now look at the second example being with 20% down. So I'm going to change this quickly to 20% down, and then the values are pretty much all going to be the same except for the down payment and how much you're able to take out in new cash. So the down payment is not going to be 20 or 5% anymore. It's going to be 20%. So I'm going to input that right there. 20% of 250 was $50,000 at the beginning that you're putting down into the property. So I'm also going to change this value right here, which is negative, what was it, $50,000 in initial cash that you took and put into the property. Why? Okay, perfect. However, now your cash that you put into this deal is 70 grand because 50,000 as a down payment and $20,000 in renovation. So all in all, you're in the property $20,000. Refinancing it at 350, leaving 20% down, meaning that you're leaving 70 grand in the property. Well, now you're able to cash out $52,000 on this property. Actually, you know what? Right after I finished filming that last clip, I realized that in the loan portion here, I still had the mortgage interest. But as I said, right, when you put 20% down, you don't have any mortgage interest anymore. So I removed that, and now, you put 50K down, you had $200,000 in mortgage loan, and this actually increased the amount of equity after the refinance and the amount that you're able to take out in cash. All right, and finally, let's quickly look at an example with a property that I actually own and recently refinanced for $458,000, as we can see here. So purchase price was $339,000, down payment 20% of that, $67,800. By the way, if you want all the full rundown of this property in terms of down payment, the cash flows each month, return on investment, cash on cash return, all of that, then make sure to check it out. I'm overlaying the thumbnail right here. But from the down payment of $67,800, that first mortgage loan was $271,200. Now, after all the refinancing, $458,000. And this is kind of an anomaly in that I didn't really need to put anything into this property in terms of renovation. This was strictly an increase in property value based on raising the rents on 2 of those units, raising them by quite a bit. But refinancing at $458,000, the new loan is $366,400, and then we need to leave 20% of the new property's value in the property as equity. So that is $91,600, right? 20% of $458,000. Now, this loan of $366,400, from here you pay back the old loan, which was $271,200, and then you are left with $95,200 that you can access in new cash on the property. All right, so that pretty much wraps up today's video going over the cash out refinance method with property investing. We went over 3 examples, one at 5% down, 20% down, and then one real life example with one of my own properties. I really hope you enjoyed it and that you now better understand how this strategy works. It's really powerful and you can utilize it to your advantage by buying an undervalued property, doing strategic renovations, upping the overall value of the property, refinancing it, taking out that money, and then repeating the process. This is currently what I have been doing. I've refinanced 2 properties, selling a couple more, and I'm going to be sharing all of this with the audience. So I really hope you enjoyed it. If you do have any questions though, I know this can be somewhat complex, leave them down in the comments and I'll answer as many as possible. If you enjoyed the video, make sure to smash the like button, it really helps the channel out. Also subscribe and hit the bell button to be notified of new and upcoming real estate, but then also stock market related content. I'd also highly recommend that you check out the links down below and sign up for Skillshare to get your free premium membership. So with that said, thanks a lot for watching, and I will see you in the next one.